The bottom for the crypto markets could potentially be just around the corner. At least that is according to Tom Lee and many others in the crypto space. You see, the fact of the matter is that it is extremely hard to time the bottom of the markets. And if the short to medium term thesis actually plays out, we could actually find ourselves with a V-shaped recovery on our hands. And as a result, that would actually mean that the time we have to take action to buy the dip is actually limited to just a small window. Therefore, in this video, we want to prepare ourselves before the potential bottom actually comes in and discuss some of the growth drivers around both Ethereum and BMNR, specifically focusing on how BMNR can continue to generate shareholder value in an accretive manner even though they are trading below 1 times mNAV. But as always, potential is a dangerous word, so let's dive in. I want to start by going through some of the recent narratives around Ethereum and Bitmine, and hopefully if you watch this video, it actually helps you to balance out some of the noise that is out there. I think recently Tom Lee has been focusing a lot on the price of gold and saying that it has been sucking liquidity out from other areas of the markets, including the crypto markets. And right now, the market cap of gold is currently trading at around $40 trillion, which is as big as, or if not slightly bigger than, the value of the entire stock market. So on that basis alone, I actually agree with Tom Lee that gold seems overvalued for where it actually historically trades at, and I do expect some sort of mean reversion in future. So I do think if you are buying gold and silver right now, you might be buying close to, if not at the top. However, the assumption that when the gold trade eventually unwinds, the capital will flow back into Ethereum, I think that is a non sequitur argument. And what I'm trying to say is that just because the gold trade could potentially find itself unwinding in the next couple of months to a year, I don't think that actually guarantees the capital will flow back into the crypto markets. I think it is highly dependent on the market sentiment at that point in time. So personally, for me, I don't see the unwinding of the gold trade as a one-to-one correlation with the crypto markets. I personally am not getting too excited just based on this fact alone. However, another aspect of Tom Lee's thesis is the potential for a V-shaped recovery, and historically there is actually reason to believe why this might be the case this time around as well. If you take a look at this graph on screen, Tom Lee has used this graph to illustrate that across the last 7 years, there have been 7 instances where Ethereum finds itself down by more than 40%, and in each of those instances, the recovery has been a V-shaped recovery. And this time around in 2026, this is the 8th time across the last 7 years that Ethereum has found itself down by more than 40%. This time around, it's down around 62%. And in all likelihood, the pattern should persist and we should find ourselves in a V-shaped recovery over the next couple of months. Therefore, there are actually a couple of things I want you to keep in mind amidst all this fear, uncertainty, and doubt that we're having in the crypto markets. Now, in recent news, people have been talking about whales selling out of Ethereum, including Vitalik. But I think this is a headline that might actually look scary, but when you dig a little bit deeper, at least in the case of Vitalik, he's actually using the capital raise to fund research into the Ethereum network, into upgrading the Ethereum network. So to me, this is actually bullish for the long term. I really have no worries over here. I think we're also starting to see more and more evidence of mainstream adoption across the last couple of weeks. I haven't really spoken at length about mainstream adoption because the news around there has been usually around smaller companies and smaller partnerships. But I think the recent news about BlackRock actually offering DeFi trading is a significant piece of news to show that the legacy financial institutions are slowly coming on chain. They're slowly adopting the blockchain and they're choosing Ethereum. And basically what this means is that previously, if BlackRock wanted to execute a trade where they wanted to move their assets, they will have to go through a whole chain of banks, clearinghouses, and filling up a bunch of paperwork. But with Ethereum, what this allows them to do is to simplify the process, cut out some of the middlemen, and lower the fees. Now, these lower fees can either go to boost their profits or be returned to their customers as some sort of yield. And to me, this is validation of Ethereum as the settlement layer for the future of finance. So I think if you think about this, then of course, Bitmine's investment into Beast Industries, who is actually moving into the fintech space, actually makes a lot of sense. But it's not just Ethereum that is getting the approval of institutions. If you have been following the news a lot recently, this shouldn't be new to you. I'm just going to spend a couple of moments here for those of you who haven't heard some of these news. BMNR, it's actually also gaining a lot of traction among institutions. During the recent 13F filings, we actually saw BlackRock increase their ownership of BMNR by 165%, Goldman Sachs by 587%, Vanguard by 65%, and the biggest of all, Bank of America by over 1,668%. And these institutions are definitely not alone. We also see increases by Morgan Stanley, by ARK Invest, and even by a Korean investment firm. So moving on from this, let's focus a little bit on BMNR and how they can actually continue to grow our Ethereum per share despite the volatility in the markets. Now, the reason why I am choosing to focus on their ability to continue growing our Ethereum per share is because as an investor, you always have to go back to your original thesis. And the original thesis for BMNR is that they're able to raise capital at a faster pace than an individual, and that because of that, they're able to go out and purchase Ethereum at a faster pace than an individual. And that is why investors, shareholders give their capital to BMNR, and that is why they tend to be trading at a premium. Now, however, if any sort of market volatility causes BMNR to have their hands tied behind their backs, unable to allocate capital to buy more Ethereum at attractive prices, then as an investor, it wouldn't make sense to double down on this investment. And so the first thing I actually want to show you is to show you how underwater BMNR have been on their current Ethereum holdings, because I believe at the start of their accumulation strategy before Tom DeMark actually came on board, they were a little bit haphazard in how fast they have been trying to accumulate Ethereum on their balance sheet. Since then, they have been a lot more controlled, especially in the last couple of weeks. You can see how much more cautious that they have been. They do not want to be buying if they do think that there could potentially be another leg lower. In fact, if I did the calculations, I believe my average on Ethereum is slightly lower than what BMNR is right now, because my average is between the $2,800 to $2,900 range. And so that is why, to me, it is extremely important that BMNR continues to prove to shareholders that they're able to allocate capital in a strategic manner and to actually make use of the market volatility to accumulate Ethereum at a faster pace than I can, at better prices than I can. And if you actually take a look at the annual disclosure, as of the 30th of November 2025, BitMine reported just over 3.7 million Ethereum on their balance sheet, and they spent around $14.95 billion to acquire this 3.7 million Ethereum. Now, as of the time of recording, we are actually on the 20th of February 2026. So I'm going to bridge the gap between 30th of November 2025 to the present day to see how their price average of Ethereum has actually changed. So what I've done is that over the last couple of weeks, I've tracked the total number of Ethereum that BitMine purchased every single week. And then over here on the next column, you can see that there's the average weekly price of Ethereum. We are going to be using the number that has been disclosed by BitMine to calculate their value every single week. Using these two numbers, when I multiply the number of Ethereum that they bought by the average weekly price, we can actually see on average, or a good estimation of how much they have spent to purchase the Ethereum. So if you take a look at the table on screen, you're going to see a yellow line drawn across the 8th of December. The reason why we are starting from 8th of December, not the 1st of December, is that because the disclosures on 1st of December basically tells you BMNR's activity on the last week of November, and on the 8th of December, the disclosures that they're reporting tells us their activity starting from the first week of December, right after that disclosure. So based on this, if you can take a look on screen, on the 8th of December, they disclosed that in the past week, they purchased just over 138,000 Ethereum at an average price of $3,139. Now, if you multiply these two numbers together, you can actually see that they spent around $434 million on Ethereum that particular week. Now, if you do this all the way until their most recent disclosure on the 16th of February, you sum up all of these numbers and add this to the $14.95 billion spent before the 30th of November 2025. This gets us to a total of around $16.8 billion spent on Ethereum. And based on their recent disclosure, they have 4,371,497 Ethereum on their balance sheet after buying around 45,000 Ethereum in the most recent week. And then if you work this out, this gets you to a cost basis of around $3,846. And that means that because Ethereum is trading at around $2,000 per day, BitMine is actually down nearly 48% of their entire holdings, and that really explains the decline in the stock price. But I do want you to hold this thought for a minute, because from here we need to discuss something else that is more important. Now, because of the volatility, what if BitMine ends up trading below its mNAV for an extended period of time? Because in one of my previous videos, I actually mentioned that that is the real risk for BMNR. So if you are listening to something that Tom Lee has said recently, he actually gave us a clue as to something he could do in such a scenario. And I'm going to play the clip here for you.
And we can always do other ways to buy more Ethereum.
There you go.
Right. So we can go, we don't have to just use cash. We can roll up other DATs. There's a lot of DATs that we could acquire.
And from this clip over here, you can actually hear that Tom Lee is open to the idea, or he's not closing the doors to the possibility of using the cash on hand, and instead of going to outrightly buy Ethereum, to go out and acquire another digital asset treasury trading below 1 times mNAV. Now, I think what many people don't realize when he actually tells us this is that this is actually a strategy that BitMine can carry out even if they themselves are trading below 1 times mNAV in a way that is still accretive to shareholders. You see, I think many of us are already familiar with the idea of BitMine not raising cash below 1 times mNAV, because if they do so and they use that money to buy Ethereum, that is going to be dilutive to shareholders, and we want them to be raising capital at a point that is above or at 1 times market net asset value. Now, I'm going to actually show you how this entire process, if they raise the capital, even if they are trading below 1 times mNAV, and use that capital to buy another digital asset treasury, that could potentially still be accretive to shareholders. So I'm going to break it down very simply for you. The assumption over here is that you have already understood how market net asset value works and why issuing shares above 1 times mNAV to go out and buy Ethereum is accretive to shareholders, and why issuing shares below 1 times mNAV to go and buy Ethereum is dilutive to shareholders. I'm not going to be repeating the technicalities behind this because I have spoken at length about it in another video. If you're interested, I'll leave the link to that video down below for you. But right now, what I want to do is to show you two sets of calculations to prove to you that even if BitMine issues shares below 1 times mNAV, if they use that capital to go out and buy another digital asset treasury instead of buying Ethereum, that could potentially still be accretive to shareholders. And that actually gives me a lot of confidence to know that even if BitMine trades below 1 times mNAV, they are not going to have both their hands tied behind their backs. They still have a strategy to increase our Ethereum per share. And so today, if you actually take a look at the valuation, BitMine is currently trading at 0.99 times mNAV. In fact, across the last couple of weeks, despite the volatility that we are seeing in the crypto markets, they have been trading at or around 1 times mNAV. And I think that is bullish for BMNR in the long term, because it shows that there is still demand for what BMNR is offering compared to some of the other digital asset treasuries. But for the sake of this example, I'm going to assume that they are actually trading below 1 times mNAV at 0.9 times mNAV, basically 10% lower than where they are today. And from here, we are also going to assume that BitMine only has 1,000 shares outstanding and they own around 10 Ethereum on their balance sheet. Now, since the price of Ethereum today is around $2,000, this means the value of the entire Ethereum on their balance sheet stands at around $20,000. Now, if you take this $20,000, divided that by the 1,000 shares outstanding, you end up with a value of $20 worth of Ethereum per share of BitMine. Now, in this example, like I said, we are assuming that they are trading at 0.9 times mNAV, which means you take 0.9, multiply that by the $20 of Ethereum per share, you end up with a BMNR share price of $18 per share. So let's say I want to go out and buy another 5 Ethereum to add to my balance sheet. And since each Ethereum is worth $2,000, this would mean that BitMine needs to raise an additional $10,000 in order to buy 5 Ethereum. And since each share of BitMine is worth $18 at this point in time, if I take $10,000, dividing this by $18, I would need to issue just over 555, let's just call it 556 shares in order to raise sufficient capital to go out and buy my 5 Ethereum. Now, at the end of that transaction, right, I raise my capital and buy the Ethereum. What would happen is that my new shares outstanding, my new total number of shares outstanding would come in at 1,556 shares, but my Ethereum holding would also increase from 10 Ethereum to 5 Ethereum right now. Now let's assume that the price of Ethereum doesn't move, it is still $2,000. That would mean that the value of Ethereum on BitMine's balance sheet is now $30,000. Now using this $30,000, dividing it by the total numbers of shares outstanding, 1,556, the Ethereum value per share actually dropped from $20 earlier, like I was showing you, to $19.29. And if BitMine continues to trade at a 0.9 times mNAV, their shares are now worth just $17.36, less than the $18 initially, despite increasing the total number of Ethereum holdings on the balance sheet. And so this is not what we want to see. But now let's say instead of going out to buy Ethereum outright, BMNR chooses to raise capital and to go out and buy another digital asset treasury. Now in this particular example, I'll be using the valuations or the numbers from ETHZilla. They have stopped disclosing their mNAV recently because they have been trading so significantly below 1 times mNAV. So what I'm going to be doing is to use an estimation based on some of the numbers that we can find publicly right now. So if you take a look on screen over here, you can see that ETHZilla, oh my goodness, pronunciation, ETHZilla has a market cap of around $67 million. And according to the blog, they have around 69,802 Ethereum on their balance sheet. Now again, assuming Ethereum is $2,000, the Ethereum on their balance sheet would be worth around $139 million. And if you take $67 million, divided that by the $139 million of Ethereum on their balance sheet, this means ETHZilla is actually trading at 0.48 times mNAV. Now, I'm going to assume that when you go out and buy another digital asset treasury, you're not just going to be paying their mNAV. So BitMine, if they want to buy ETHZilla, they're not going to just be buying them for 0.48. They are going to have to pay a premium above the mNAV. And so let's say the premium is 50%, right? So with an mNAV of 0.48, 50% of that would be an additional 0.24. So 0.24 plus 0.48, which is the current mNAV, that would mean that BitMine would be buying Ethereum, or not Ethereum, sorry, buying ETHZilla at an mNAV of 0.72. Now, if BitMine actually goes out and purchases ETHZilla for 0.72 times mNAV, let's take a look at how this actually works out. So similar to the first example, we start off with 1,000 shares of BitMine and BitMine having 10 Ethereum on the balance sheet. Each of the Ethereum is worth $2,000, total value $20,000, trading at 0.9 times mNAV, which would work out to the same $18 per share of BitMine. This is exactly the same starting point, but instead of going out to buy Ethereum, they go out and buy ETHZilla. So how that would work is that if you take a look at the second column over here, ETHZilla have the same 1,000 shares outstanding as BitMine, but they only have 5 Ethereum on their balance sheet. Now, since each Ethereum is trading at $2,000, this would mean that the total value of Ethereum on the balance sheet of ETHZilla is around $10,000, right? So if you take $10,000, divide by the 1,000 shares outstanding, ETHZilla has around $10 worth of Ethereum per share. Now, BitMine has decided to pay 0.72 times mNAV for ETHZilla, and that would mean that because currently, if you take a look at the mNAV of ETHZilla, they're trading at 0.48 times mNAV, means the price of ETHZilla is around $4.80. BitMine is going to be paying more than that. They're going to be buying ETHZilla at $7.20 per share. How do we get that? 0.72 multiplied by the $10 of Ethereum per share. Now, this would mean that BitMine can actually buy out the entirety of ETHZilla for just $7,200 and own the 5 Ethereum on their own balance sheet. So firstly, if you think about it at that level, it would mean that instead of buying 5 Ethereum outright for $10,000, you're buying 5 Ethereum for $7,200, which, on a very high level, you can already understand that that is a discount. But earlier on, with that first example, we also demonstrate that by increasing the number of Ethereum that you have on the balance sheet doesn't necessarily make it good for shareholders, because you can still be diluting shareholders. So I need to dig a little bit deeper into the numbers. And the most important thing is that you actually have to do this in a way that is accretive to the shareholders, which means you allow them to own more Ethereum per share at the end of your transaction. So let's see how the math actually works out over here. Assuming the same scenario as the start, BitMine shares are trading at $18 per share, but right now, instead of raising $10,000, you need to just raise $7,200 to buy out the entirety of ETHZilla, which would mean if you take 7,002 divide by $18 per share, you would need to issue an additional 400 shares of BitMine to raise the capital to completely buy out ETHZilla. Now, at the end of this transaction, what actually happens, the new share count would come in at 1,400 shares outstanding, and now BitMine would have 15 Ethereum on their balance sheet, with each Ethereum worth around $2,000, bringing the total value of their balance sheet to $30,000. And you take this $30,000, divided this by the 1,400 shares outstanding, you end up with an Ethereum value per share of $21.43. This is already up from the $20 that we were showing you before this transaction happened. Now, even if BitMine continues to just trade at a 0.9 times mNAV, if you take 0.9 multiply by $21.43, this would mean BitMine would now be worth $19.29 instead of $18 per share where we started off at the start of the transaction. And so essentially what is happening over here is that even though BitMine might be trading at a discount to their market net asset value based on the Ethereum on the balance sheet, they are using that cash to buy someone else that is at an even bigger discount, and because of that they can actually still increase the Ethereum per share for the shareholders in an accretive manner, although it might seem on the surface that they are diluting the shareholder base. And understanding this, how they can actually continue to grow the Ethereum per share in an accretive manner despite the volatility of Ethereum, is something that actually helps me look past the volatility in the short to medium term and to add to my position recently, which is exactly what I've done. But I think more importantly, in next week's video, I'm going to have to talk a little bit more about my assumptions if the crypto winter actually extends longer than we expect, and how that actually affects the overall valuation of BitMine. And with that, I will see you in the next one.